In this video, I'm gonna showcase an SMC strategy that when used correctly has the potential to be the most profitable SMC strategy you've ever encountered. I'm gonna go over what indicators are needed for this strategy as well as the entry and exit conditions. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, the main indicator of this strategy is called protected highs and lows. To add it to your chart, you're gonna go to TradingView, which is the trading platform that I'm gonna be using. If you need to sign up, the link for that will be in the video description. Next, you wanna load the 5-minute time frame of any trading security that you like. But you're not gonna be limited to this because this strategy can actually work on any time frame. Then click on indicators and type in protected highs and lows. And it's gonna be this one by Trader 4Up. Now, the protected highs and lows indicator presents a methodology to identify market structure using fractal highs and lows to pinpoint significant swing pivot points in the market. Now, let's go over what this indicator is made of. First of all, you can see this indicator changes the color of the candles. If you don't like the color change, there is an option in the settings to disable that. And then this line that changes color between blue and red is called protected trail. And it's going to be used to indicate the different swing highs and swing lows that are considered protected. Next, we have this upward and downward arrows. The blue upward arrows indicate protected lows and the red downward arrows indicate protected highs. Next, we have these dotted horizontal levels. These represent market structure shifts, also known as MSS, as indicated here. Then these levels that are not labeled indicate breaks of structure, also known as BOS. Now, to see both the BOS and the MSS labels, you just go into the settings, then under the Show Structure Labels, you're gonna select All. Now, at this point in time, you probably are thinking,
but what is a protected low and what is a protected high?
Well, the concept is actually really simple. Whenever there is a swing low and the market breaks and closes above a bullish BOS or a bullish MSS level, that swing low becomes protected. Conversely, whenever there is a swing high and the price breaks and closes under a bearish BOS or MSS level, that swing high becomes protected. Simple. The aim of this protection is to ensure that the price has a less likelihood of coming back down or up and breaching the swing low or high respectively. Because once prices break beyond a BOS or an MSS level, it usually increases the probability of it continuing in that direction. Now, let's access the settings of this indicator so we can change it to suit our strategy. On the Inputs tab, you want to change the pivot strength to 5. We're going to disable the Trend Candles option. We're also going to disable the Show Protected Highs and Lows option. After that, click OK. Next, we will explore how we can use this indicator to trade. But before that, let's talk about the Forex broker called Fintura. Now, I've been using Fintura for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fintura. The reason why I think Fintura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of us who love high leverage, if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, they're going to give you a bonus of $5,000, giving you a total of $10,000 to trade with. To access the bonus as well as all the other perks, sign up to Fintura using the link in the video description. Now, let's get back to the video. Where were we? Oh, we're supposed to go over how we can use this indicator to trade. Well, to take a long position, we basically identify a bullish BOS label. We then wait for the price to break and close above the level, and then we take the trade. Conversely, for a short position, we just take a look through our charts and locate a bearish BOS level. We then wait for the price to break and close under the level, and then we take our short entry. But of course, just like any other trading indicator, this one cannot be used alone, which means we're gonna combine it with one more trading tool to craft a simple and profitable strategy. On the indicator search tab, type in ADX and DI with colored histogram, and it's gonna be this one by this guy. then double click on it so we can change some settings. On the style tab, we're gonna disable both the positive directional indicator, which is this first option, and the negative directional indicator, which is this second option. After that, click OK. So we're gonna be using this modified version of the ADX and DI indicator to identify the strength and direction of market trend. These histogram bars are used to indicate the trend direction and strength. If it's colored green and headed upwards like here, this indicates a strong bullish trend. Conversely, if it's colored red and headed upwards like this indicates a bearish trend with increasing strength. Now, how do we take long and short positions using these two indicators that we have here? Well, let me show you. To take a long trade, the first condition is to identify a bullish break of structure, also known as a bullish BOS. For that, we just use the protected highs and lows indicator. This is a bullish BOS. And right here, as you can see, this is the actual candle that closed above the BOS. But why do we have this extra candle right here? Well, it's because this indicator actually needs one extra candle to confirm that a swing high is a valid BOS. Because sometimes the price can just break and close above a BOS level and then on the next candle come right back down. So this extra candle is just for extra confirmation. Now, the second condition, which is also our last condition, is to confirm that from the origin of this BOS level to the final break and close, the histogram of the ADX and DI was colored green with no gaps in between, like it is right here. This is the origin of the BOS and this is the final break and close. So you basically want to ensure that from here to here, this histogram maintains only the green color and there isn't any gap in between. A gap is basically something like here, a space with no histogram bar. So this is a gap and we don't want this gap to be anywhere here. If we had any gap here, this entry would become invalid and we'll have to skip it. All our entry conditions are met on this candle, so we're gonna take a long position. The stop loss is gonna go right under the most recent swing high. And for the take profit, we're gonna target 1 times the risk for a risk reward ratio of 1 to 1, letting the trade run and take profit. Here is another long position. As you can see, this is a bullish BOS because the price broke and closed above this level. Looking at the histogram of the ADX and DI, we can see that it actually was colored green beginning from the origin of the BOS level to the end of the BOS level with no gaps in between. So this is actually a valid trade. Now, this was not a valid trade because, as you can see, we actually did have a bullish BOS, but looking at the histogram from the origin of the BOS level to the end of it, there actually was this gap right here, which invalidated this setup, so we had to skip it. Now, how do we take a short position? Well, it's actually going to be the opposite of everything we did for the long positions. So, condition number 1, we identify a bearish BOS level, which is this. Then lastly, we just make sure that from here to here, the histogram of the ADX and DI was colored red with no gaps in between. As you can see, the second condition was also satisfied, so we enter a short position. The stop loss is going to go right above the most recent swing high. And then for the take profit, we target a risk-reward ratio of 1 to 1, letting the trade run and take profit. In summary, this strategy is super effective. I managed to do a rough and quick backtest of it from January 2024 to the 20th of March 2024, and the results were actually really great. If you're interested in it, you can do further backtests so you can total at least 100 trades and see how profitable it's gonna be over a longer period of time. Remember, this video is not financial advice, so you wanna be super diligent before committing to trading with your real money. Well, that's basically it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.